All right, Munchkins, let's take a look at the cable market. This is pound dollar. And we'll go through our little optimal trade entry. Pull it down to this lowest close. And I'm using the highest up close in here. This is swing high. See here the high is 134.55. Next candle is 134.58. And obviously you can see it's a lower high on this candle here. So I'm using that swing high. Projected down gives us a range. Optimal trade entry right in here. And we are inside of a consolidation also. Okay. So in terms of overbought, oversold, we won't need the utilization of an RSI or a stochastic or a Williams percent R to give us a reading of overbought because we're in a range. Okay, we're in the top side of that range. Just for spits and giggles, I'll give you guys I'll go Williams percent R. We haven't used his in a while. There you go. We're overbought, and there you go. But we didn't need to have this stuff down here to see that we're inside of a range and we're on the top side of it. So again, indicators not necessary. Okay, so now we have some projections down here. Share them with you now in case we get some big movement overnight and going into non-farm payroll 8:30 tomorrow, New York time. Okay, so we have 129.69 and 128.41. There's our two objectives. And should we get really insane on the downside, we have 127.03. Okay, I don't suspect that's going to be the case tomorrow, but we certainly could see target 1 and maybe make its way down to 28.41. Maybe. We'll see. Depends on how much of a rally we get in the dollar index. All right, so with this on our charts, I also want to bring your attention to we have these quasi railroad tracks in here, and price was able to come back up, trade above that. Okay, so we have a turtle soup scenario, which is a false breakout. So we're going to have this level on our charts, and we're going to drop down into a lower time frame. Okay, so we can see our cable on an hourly basis. We had traded above that old high here, and then broke down right in here. This is a market structure break right there. Okay, so when we dipped below it, any future rally should be viewed as a suspect rally. That means it's probably really going to be distribution, and the market will probably roll over and go lower. Now, because of the interest rate announcement that was due out this morning in New York time for cable or British pound, I was a little reluctant in trading it in here. I wanted to see it prove to me that it want to go lower, and I'll show you what that looks like if we go down into a, okay, so we can see it on a 15-minute time frame. Again, the same market structure break here, went lower, and then we rallied up. Let me put the day dividers in so you can see how they fluffed it up right from the beginning of Asia. Right on in, and then we went slightly consolidated, and then we broke down. This high and this low is what I used for my optimal trade entry. And you guys saw that on my phone. I sat up all night long, basically ran my battery down and drove my wife nuts. She was like, look, if you're going to be looking at that thing, can you get out of the bed? And I was like, no, I can't do it. I just can't do it. I got to be comfortable. So I kind of tortured her last night. I'm probably going to pay the price for it. But nonetheless, this is what I was looking at. This is the optimal trade entry range that I was looking at from a 15-minute standpoint. And I knew I had the likelihood of it trading back up here would most likely send it lower. Not this one here. This was post my exit. I told you on Twitter that I'd probably see a retracement in the New York session, and it would probably run my stop that I had at 32.35, and it clearly would have ran that out easily and would have toasted the remaining portion of one standard lie I had on. I took 4 off at 20, 32.20. So let's dip down into a little bit smaller time frame. We're going to look at the 5-minute chart. Okay, so here's the 5-minute. We'll zoom in a little bit. Okay, and this was the range off of the 15-minute time frame, and all I did was dial in a little bit deeper, the highest body and the lowest body here, and that gets us right into here. And as price traded right up into that off my iPhone, I traded short right there. Now, it was slightly outside the kill zone for London, but my rationale was that we would probably see it tank, and I wanted to see it run out the high, not yesterday, but the day before, that low right here. So what I'm going to do is I'm going to take this, copy it, and just drag it on down there, and we'll skedaddle right back on over to where we were. And right before this business was taking place, okay, I wanted to be out at 32.15. If this was my target, okay, 131.93 was this level here from 2 days ago, that low. I want to be getting out ahead of that. I don't want to be sitting in something that, like, well, you saw a perfect example of it today. You didn't know the target I was really looking for was 2 days ago's low, but that's exactly what I was looking for. But even with that, and trying to get out early at 32.15, it was flirting around with me here, and I didn't want to hold on to it because of the bank rate announcement, and it ended up tanking one more leg lower. It would have filled me on my limit, but it never would have got to my initial objective before having a really deep retracement all the way up to here and then spiking down. So, I mean, in my opinion, I managed it appropriately, but those were the mechanics behind it. And it's hard to get a good picture of it without that big candle screwing it all up. Right in here, yeah. So that's the range I worked within. And as price was trading up, and that's where I wanted to get it. Right from the open on this candle here, it opened at 32.60, and a small little spike up, 1 pip, and caught it, and it just slid on down. So that was the move for cable. I actually shared on Twitter a level down here of 130.37, and we only got down to a low of 30.45, so I was off there, but the direction was right, and I was able to peel something off, in a positive note. Didn't get the high, didn't get the low, but I got a little piece of the pie. I didn't get all this movement here, but that's expected for a bank rate. You gotta try not to be in front of that too much. That's going to be it, folks. Hopefully you found this one insightful. Until next time, wish good luck and good trading.